But let's get to our next guest. That's going to be Jenny Horne, markets correspondent here on the network with breaking news. We got jobless claims, Jenny, coming in below estimates. And this is not surprising because that seems to be the theme. Jobless claims on a weekly basis continue to come in at near historical lows.
Yeah, I mean, so they coming in around 227,000. Now that was versus the 242,000 estimate. Previous was 241,000. So I mean, like, I will say that given the fact that the estimate was pretty much in line with what we saw a week ago, now we're seeing that come in lower. I mean, continuing claims also coming in around 1.9 million. That was another figure that was seen, I mean, lower than expected. So this is a pretty solid number. And I know that we keep waiting for like this massive hurricane impact. We keep talking about that impact on the employment situation. We haven't seen that reflected, at least in terms of these weekly jobless numbers.
Yeah, in the continuing claims, I'm seeing 1.897 million versus estimates about 1.88. So that was a little bit higher. Maybe that's part of that impact from the hurricanes. But, you know, the Fed keeps on talking, and that's why they cut 50 basis points in their last meeting in September, with the expectations that the job market was weakening, but non-farm payrolls have come in above expectations. Jobless claims continue to be robust on a week-over-week basis. So, you know, did the Fed get it wrong, or is this just basically a reprieve? Because we're going into the Q4 that's historically pretty good for the jobs market.
I know, and I was seeing that these continuing jobless claims now are at a one-year high, and just looking actually at like the bar graph of it, I mean, it's amazing the way we've accelerated just over the last now 4 weeks consistently. So I think that's huge. I don't know if I think we're jumping the gun to say the Fed got it wrong. I think that was the narrative on the last time we got a jobless report that was better than expected. So I feel like we're way too quick to say that the Fed's actions were not, I mean, right now accretive to the market, because so far, I mean, it seems like the market's received it well. And I mean, this is a good news for all. I think anytime you have labor as a concern, that's a huge problem for an economy. It's obviously not. I mean, at least in terms of these weekly numbers we keep getting.
Yeah, and to your point, I expected some hurricane impact on some of this data, but we'll have to wait and see, because they always have revisions, and it's a weekly number. So the Fed continues to watch that. On the jobs, now let's flip it over to earnings. We had some more airlines. I charted the Jets ETF, which is overbought. American Airlines, stock's actually down a little bit. It popped on post-earnings on a pretty decent report. But this stock's made a pretty good run. It was already up 14% month to date. So pulling back here just a little bit, even though results look pretty good, Jenny.
They do look pretty good. And I will say, better than expected earnings. We did see they also raised their full year guidance. The Vet shares, again, lowered this morning. Now, the company's adjusted profits came in around 30 cents a share. That was better than the 13 cents a share expected. And on a non-adjusted basis, we are still seeing losses for this company that has a pretty blistering balance sheet situation they've got to work out. But right now, American will get the chance to obviously just show investors the gap they're trying to close with their legacy carrier rivals, and of course these results, because we've seen now United was a solid performer, was the best performer actually in the S&P 500 following its quarterly results. Delta was somewhat of a mixed picture, but I think it's encouraging at least that all of these companies are raising their guidance and forecasting, I mean, solid demand trends into the back half of this year.
Yeah, and you mentioned UAL. That was gone parabolic. Delta's been doing really well. Those are both positive on the year. American Airlines still down over 6% so far in 2024. So this one's been a laggard. They've got more debt on their balance sheet. They're, probably the least healthy out of the big four. Maybe Southwest is in there also. But Southwest Airlines, news stories besides an earnings beat here, Jenny, but that stock's coming off of pre-market highs also.
I know. I'm surprised this one wasn't able to hold on because, again, profit well above expectations. They also revealed they've struck this deal now to end their feud with the activist hedge fund Elliott Investment Management earlier this morning. So adjusted earnings came in around 15 cents a share. That more than doubled forecasts. Sales around $6.9 billion, also pretty easily cleared expectations. Also forecasting that revenue per available seat mile, which is that key metric, of course, that really shows the supply and demand balance for the airline industry, will climb between 3.5% to 5.5% over the current quarter compared to a year ago. Also said that they're seeing some strong holiday season demand. And again, I do think that it's encouraging that the deal they saw to appoint 5 of Elliott's nominees to its board now seems like it's ended, and that bad blood we've seen between the airline and the hedge fund, I think is at least a hurdle that was cleared. I mean, anytime you have an activist basically chirping at all that you're doing wrong, I think that creates some unease as a shareholder. So they did say that Gary Kelly will leave his board seat earlier than planned, but CEO Bob Jordan managed to cling on to his role as part of the settlement, and Elliott had previously called for both to be dismissed. So,
yeah.
I mean, maybe you could see that as a win, or maybe you could see it as they need a clean of house, I guess, depending on your feelings on Southwest's conviction ever since that disastrous holiday period for them.
Yeah, they got their 5 Elliott board nominees input there, and then also Chevron CFO got put on the board. So a total of 6 now. And, Elliott got involved, and the stock's been up, but all the airlines have been up. But I think the key here, Jenny, let's wrap this up, is the fact that Southwest Airlines changing their structure where it's not a free-for-all when you get on that plane. And if you listen to Delta, United, American, the premium seating is the breadwinner for these companies, and those continue to have robust numbers. So Southwest, a little bit late to the game, but this is probably a benefit for them moving forward.
I mean, because I feel like the seat upgrades must just be a cash cow, because the amount of times I've been like, I'm not paying for a seat, and then 20 minutes, 30 minutes before my flight, I'm like, I could upgrade, and I'll pay an extra $40, $50. I mean, everyone does it. So yeah, I think that has been hugely, accretive to Delta, United, these standouts in the pack. Yeah. But I have never flown Southwest for that very reason. I will not be fighting someone for a seat.
I used to fly Southwest when I flew a lot for business, but I don't.
It's easy. I feel like it's an easy airline.
Yep. They got a hub here in Chicago, too, so it's relatively easy. I don't fly them either, Jenny, but...
Because you're not fighting for your seat either.
Yes, that's true. All right, great stuff. Good breakdown for us. That's Jenny Horne, Markets Correspondent.